Welcome to Odds and Ends with Rob Friesen and Dave Singh. This is a Stock Odds podcast helping you get ready for the week ahead. Good evening, Rob. How's everything?
Not too bad. Thank you so much.
Yeah, we had our first week here of 2022, and it was kind of a rocky start. But
well, the last 4 days we sold off there, right?
Yeah.
Just out of curiosity, what did you observe from the week that was notable to you?
I mean, it was such a gangbusters first day of the trading day of the year, but then ever since then, it really has been this de-risking, right? People are getting out of the high PE symbols, going into the lower PE ones. Flight to quality, right? Going for bigger cap things. Even the FANG, right? That's better than the small caps or the high risk, high growth biotech and technology stocks. So it's just people are fleeing those things that don't have earnings and going for the big stuff, right? And we've seen that before.
I did talk about that a little bit on Tuesday and Wednesday with Joel on our show in the morning, and then it was nice to hear some feedback from some of our subscribers that they did take it to heart and make a little bit of adjustments in terms of curating some quality names and then going and putting them into StockOdds and looking at the statistics from that perspective. So kind of first deciding, like, not leaving it so open season for just whatever from every group and in every industry and every market cap and every PE, no matter what. Like, hey, listen, when you've been in a 2-year kind of window where a technology stock, every time it's dropped, they've bought it back up, but it's really speculative and it has no earnings. And it's all about making money sometime in 2034. That finally came to roost. And we saw it a little bit in November, more so in December. And then finally, this last week, we saw them just say, you know what? I'm dumping this speculative or the high PE stuff, and I'm rotating into some of the lower beta, more defensive. Some of the old names that kind of are dodgy and boring, but they sprung back into life, and we saw some great move, like something like Berkshire Bees, been powering up. Something like Exxon. Exxon is usually pretty boring, but like it's been on the move, and that's on the back of oil stocks already moving quite a bit in the last few months. So,
and this has all been happening at the same time. The 10-year has taken a steep rise higher, right? Over a week, I think it's up almost 0.25%, which is right in line with de-risking and growth stocks and tech stocks. So do you think that run is done, right? Or can we just continue the same trend for the week ahead?
Well, I mean, the backdrop here is that, the debate is whether it's 3 interest rate hikes or 4 that the Fed has, in play, or, the question is whether they're going to let the market do some of it for them. The question is whether the dollar strength will help alleviate some of that. But the taper, being a little more aggressive and the Fed being a little bit more hawkish, all of these things are kind of swirling together to say, we've still got inflation, we've still got a hot economy, and the Fed is, got to move and do stuff. And so it does put more risk onto the speculative and higher PE names. And I imagine that could continue for a little bit yet. I'm waiting for the day when just suddenly, all of a sudden, it rotates completely back. And the interesting thing was, Thursday was a little bit like that almost at the start. It was like kind of weird where things were, opening down, and then kind of the riskier stuff was rallying a bit, and then all of a sudden it goes, and it sold off again. It was kind of weird. It's a strange day. But some of these days have worked out really well with the paying attention to the fundamentals, which we haven't really talked about a lot when we're talking about statistical trading and stuff. We don't get a lot into the fundamentals, and fundamentals are looked at now as maybe, do they really matter? Does it even matter? And there's some argument for, people are just trading names because they like them, they see a future for them, and they're not really paying attention to what the metrics are. But I think we saw a bit of, kind of coordinated money flow that went back on a fundamental basis. That's what I really saw this last week, was I saw the fundamentals being more important to a pretty significant class of investors, because there was a lot of money flow into those names, right?
Yeah.
So what do we got here? So we've got CPI on Wednesday. We got PPI on Thursday and retail sales on Friday. Now those are all December numbers, so it's just playing the lagging thing, but they do matter. CPI especially on Wednesday. Just notably, China's now having problem with a lot of the healthcare companies and stocks. They're still having a problem with real estate. There's another real estate thing like Evergrande going on. The tech names still under pressure. China's got some problems, so just watch for that. Be careful. Like when you do even curating some stocks, you might bring in some Chinese ADRs and not know it unless you're checking for that specifically. So do watch for China names. We opened on the futures and moved up a little bit, but we're kind of not. It's not really showing super strength right now on the futures.
It's kind of flat, but the Nasdaq is up slightly, so that's kind of a sign that maybe there's going to be some reversal of last week's move.
I would favor the Qs over the IWM. I would favor the Qs over the Russell for sure. When in doubt, I would still probably continue with the focus on the quality of the S&P 500, and probably, I think it still feels too early to be pressing the higher beta, sort of tech area of the NASDAQ 100. It still feels a bit early. Maybe mid-month seasonality might be, I think that starts on Thursday, right?
Yeah, I did a study on that, so I have some screens here.
Yeah, okay, why don't you rattle that off and let us know what you saw there.
I use this, again, the seasonality almanac, the free almanac in StockOdds, and this mid-month is the 9th and 10th business day, so that's going to be Thursday and Friday this week. So I started off looking at what ETFs might be stronger in January, and it showed, again, gold, GDX, but most of them were tech stocks. It was XLK, QQQ, the SMH and SOX. So chips and NASDAQ were pretty strong. But then I went individually to see which ETFs might outperform the spider, just to get some kind of pair combinations or themes. So I started with the IWM, the Russell, the small caps, and they're expected to underperform the spider come mid-month seasonality, only a positive 0.56 relative to 1.0% for the spider. So about half the performance. And then I compared the QQQ, and that's expected to outperform. So 1.67% for the QQQ versus 1.0 for the spider. So again, that kind of confirms what we were talking about. And then SMH, again, is expected to outperform the spider. Even XLI, industrial, is expected to vastly underperform the spider, almost 0% gain versus the spider's 1%. And financials, even though they've been strong with the 10-year note going up recently, they're expected to be pretty flat too, almost 0% performance relative to the spider. And I have a couple more here. Utilities are expected to outperform. Staples are expected to outperform. Discretionary underperform the spider, and materials underperform the spider. So that just gives you an idea of which sectors you might be able to play against each other or pull symbols from for your longs and shorts, given the mid-month seasonality backdrop.
Yeah, and let's say again that starts that window of mid-month seasonality, which is payroll deposits, 401k money, just some institutional mid-month stuff. It's really 9th through 14th business day. I would wait the sort of the 10th and 11th, 12th business day, maybe heavier. Sometimes the 9th business day, because we had kind of a slow start, like in terms of participation this year because of, Monday not being a holiday, but, a lot of people still took it as a holiday last Monday. Then, it might kick over even to the following week. But so Thursday, watch for it. And then what you would be looking for is a bit of that groundswell, kind of that mid-month bump, just like you can get near the end of the month, some months of the year as well. Now, January is not supposed to finish usually as strong as that mid-month seasonality. Just note that. So if we're going to have, some people coming back in and picking up some of the stuff that got really oversold, some of the tax loss selling, things like that, it might be mid-month when that gets picked up. You have to go back to December and go, were there any big selling days, in December within the first 2 weeks that look like tax loss selling? And look at how some of these names performed, and then bump it 30 days from that and look at when they might want to rebuy it. Okay.
That sounds good.
So, I think, for the start here, my tendency would be to look at the S&P 500, and I'm going to still stick with the better quality fundamentals as more of the long candidates, and the poor, riskier stuff as the short candidates. And then of course just put that all into StockOdds and take odds and go with that.
Good plan. How about oil? So like oil's down in the futures about 0.5% right now. Had a huge week last week, up almost 8% on the week. What would you do with that? I mean,
well, I think oil is stabilizing. So here's the problem. The problem is if it were to open down tomorrow morning too much, then it could just have that discount and kind of stabilize, and you would still lose money if you were trading like from the open to the close. Mm-hmm. If it was to open up as like a follow through from last week and everybody's going, wow, oil's been so strong, I got to get in, and it opens up, then I would be comfortable shorting it, because I think it's moving into a more stable phase now. I think it's had the majority of its run.
Very good.
But I mean, if you're trading open to close or any, something you want to do intraday like that, your starting point is really important, right? Uh-huh. In order to make money, you have to start at a premium with the oil shorts or whatever. Okay.
Yeah.
All right. We'll call it quits. Thanks for being available, and have a good trading week.
All right. Good luck. Thanks.